But the first question that came in says, in 2011, the posturing around this issue, and I believe she's referring back to the debt ceiling, resulted in an 18% drop in the S&P. If this happens again, do you foresee any impediment preventing recovery within 6 months? Jonathan, you want to answer that?
Yeah, I think one of the major things that probably led to the market losing 18% then was definitely the debt ceiling, but probably more specifically, the United States government got downgraded from AAA to AA in that time frame. And so that was probably a little bit of a wake-up call, not only for ourselves that we are not invincible, but for others to say, if you are going to buy treasury bonds, AA is still very low risk in default, but AAA is less risk. So I think some of it was from that. And I think the sell-off was at the time, if we're going from AAA to AA, how shaky are things? Can we really pay our bills? Can we really keep this government open? And is it going to get worse? As that faded, you see that the market kind of rebounded and kind of got its footing. When they start to look at valuations, what you start to see is people come in and say, I just don't think Walmart's going out of business. And that's not a plug on Walmart specifically, or a recommendation on Walmart, but it's headline news, while important, is very much different from fundamentals and earnings power of companies. And we believe earnings are ultimately what drive companies and the stock market for long term. And so I don't know if we see a major, pullback in this market regarding the debt ceiling, if this does drag out, is it 10, 15, 20%? And how quickly does it take to recover? I would think that if that happens, it's an opportunity to go shopping and try to pick up some bargains, because I do think it'll be relatively short-lived.
That's where the volatility can work for you if you're reinvesting your dividends. But to make a long story short again, if you see a downturn, there is an opportunity to take advantage of lower prices and to buy. If you go back to March of 2020, when they shut the whole country down because of COVID, and we saw that 34% drop in the market in a span of weeks, and then it recovered to have a positive year of plus 16%. You can see the volatility. That's pretty extreme. That's a big move from 34% down to 16% up. I look at a lot of this as more noise than anything else.